One of my favorite things to write off is children. Our current tax code allows you, as a small business, to hire your children as employees. And because they're under the age of 18, they don't actually have to file income tax on anything under $13,850. And I'll pull that up and show you. I think it's right here. Pull that up. There it is. So you can see here, you can pay your child. And if you want to Google this and fact check me, I highly recommend it. Go on to Google, type in hire my kid. So if your child's under 18, and depending on the business that you have, because it does depend, you need to have an S Corp or a C Corp. It can't be a sole proprietor. And I'll go over why on that later. Technically, it is the actual sole proprietor hiring the business, but it needs, in order to write it off and not have to pay income tax on that money and not have to pay self-employment tax, it's really a three-part process. So you can pay your child, as of this year, $13,850. Now that goes up every year. Once they turn 18 and they go to college, you can actually go up to $35,000. Now I'm going to scroll up here so you can see it. And the child actually has to do work for the business. They have to do something. You can't just send them a check for doing nothing. And it's not allowance money. It's work for work done inside the business. So you can see it right here. Work done inside the business that you benefit from. Vacuuming in the office, emptying the trash, doing the dishes, washing your company car. And if you don't have an office outside of the business, it's outside of the home, then it can be vacuuming and cleaning your home office. If you have a vehicle that you use part of the vehicle or use the vehicle for business purposes, then you can pay the child to wash the vehicle because it's a company vehicle. So what you want to do is you need to actually pay them. So I'm going to show you now how to do this. So first thing you need is you need to be an actual business. So this needs to be an S Corp or a C Corp. Or it can be an LLC taxed as an S Corp or C Corp. But it cannot be just an LLC taxed as a sole proprietorship. If you're not sure if you're taxed as an S or a C, you're most likely taxed as a sole proprietor. Because when you first set up an LLC, it's defaulted to sole proprietorship. There's no tax benefits whatsoever of starting an LLC. It's asset protection. It's not until you fill out IRS form 2553 that you can actually get tax benefits from the LLC. So make sure that you're set up to be taxed as an S or C Corp, and you need to talk to your tax professional, whoever does your taxes. Have them help you with the form. It's IRS form 2553. You sign it, date it, check the box that you want to be S election, and you're done. And you mail it into the IRS, and you can actually backdate it, I believe, 18 months. So if you're a sole LLC taxed as a sole proprietor right now, you can actually backdate it to January 1st, which would give you all of this year's write-offs. It'll allow you to actually get the benefits of having a corporation. So again, we have to have it. And so I'm just going to use my company, for example, just so it's easy to understand. When I have 3 children, and when my kids were little, this is what I did. So Fortress is the Inc. This is a corporation, so it's Fortress Inc. What you need to do is you need to set up a sole prop. Okay. Now that sole prop is sole proprietor. You do not need to set up another LLC. Now, if you already have a second LLC set up, you can use that. But if you don't already have a second LLC, then you simply go to the Secretary of State's website and you file to a sole proprietorship doing business as. You pay the $5 fee, the $10 fee, whatever it is in your state. If you live in California, it's probably $1,500, $2,000 because, well, that's California. But I don't know what it is. You need to look it up. I'm not a tax professional. I'm simply sharing with you a few things that I, as an entrepreneur, have paid my tax attorney to teach me. And I'm simply just sharing that with you. Okay. So I don't know every single detail about taxes. I just know just enough to tell my CPA that I want to do this, because your CPA's job is not to save you taxes. So in my case, I had 3 kids. I got Chastney, I got Toya, and I got Indiana. Just like that. Now you can pay each kid $13,850. Now that goes up every year. Last year was $12,000. I don't know what it's going to next year. I'll find out once we're into next year, but I know it's going to be higher. It'll probably be closer to $15,000 next year. But as of right now, for 2023, it's $13,850. Okay. So you can pay that kid $13,850. The way to do it is your Inc., your S Corp or C Corp, pays the sole proprietorship for management services. So mine was called Lambeth Enterprises. Wasn't an LLC, wasn't an S Corp, wasn't a C. It's a sole proprietor. When I set this up, I went to Colorado Secretary of State. I paid $50. I registered the DBA, doing business as, and I registered it with the state so I could go to a bank and open a bank account. You can have the bank account, all of these. So you're going to have 5 bank accounts, 1 for each kid. If you got 3 kids, you'll need 5 bank accounts total. If you only got 1 bank account or 1 kid, you only need 3 bank accounts. 1 for your S Corp, 1 for your sole proprietor, 1 for each kid. Okay. So now Fortress pays the sole proprietor for management services, consulting, whatever you want to call it. And then the sole proprietor, each kid gets money. And then these kids can spend the money on whatever they want. The IRS doesn't care about what happens once it goes to the kids. The IRS only cares about where the money went. It goes from the S Corp to the sole proprietor. Once it leaves the sole proprietor's business account and goes into the kids' bank accounts, IRS doesn't track it after that. They're not required. You're not required to file a tax return for that child if it's under $13,850. Now, if your kids they got a side hustle on their own and they're making money outside of the $13,850, then they are required to file a tax return. So if they're a teenager and they're also working for McDonald's or In-N-Out or whatever, they have to file a tax return. But that first $13,850 is 100% tax-free for them. So now Fortress paid the sole proprietor, Lambeth Enterprises, and then Lambeth Enterprises paid $13,850 to each kid. And then what I did is I paid my mortgage, I paid car payments, and this one paid groceries. I also paid for their clothing. I paid for their gymnastics, their karate, their modeling, and all of the stuff that we spend money on our kids. I used their bank accounts to pay that stuff. Now, if you want, you can literally go here and have your personal bank, and you can take the money from Fortress to the sole proprietor to the kid's bank account, and then you can actually put it all back into the personal bank account and then pay bills out of that bank account. It doesn't matter. Whatever's the easiest thing for you. Now, if you're blessed and you have extra income and you don't need to use the $13,850 to pay your own personal bills, and you actually have a retirement account set up for your kids. I have lots of clients and friends that have retirement accounts for their kids as soon as they're born, called a Roth IRA, 529 plan set up for the kids for college. I also know people that put money aside for allowances. So if you're blessed and you have enough extra money, you can invest that money for the child. You don't have to use it to pay bills. But if you're like most Americans and you're struggling and you're living paycheck to paycheck, you can use that money that you put into the kid's bank account to pay your bills. There's nothing wrong with that. You just got to set it up. It has to go from your S Corp to your sole proprietor to the kids. Now, when you go to get the kids' bank account, the kids can't just go into the bank and open a bank account as minors. So if you go into your bank and you're like, hey, I got a 4-year-old and I want to get a bank account for the 4-year-old, You can't do it. You have to get a bank account and then add the child as a signer. Why do I bring that up? Because I used to hear that all the time. Rondi, I went to the bank and they said my kids can't have a bank account because they're minors. They can't. But you can have another bank account with them as a signer, their names on it. Why is that important? Because you cannot pay directly. You can't do that. If you pay them directly, you have to pay 16 to 18% for self-employment. Because corporations have to pay self-employment tax if it goes to an individual. Corporations do not have to pay self-employment tax if it goes to another business. And a sole prop that pays kids does not have to pay self-employment tax. So if you're a small business owner and you simply just want to save the self-employment tax of 16 to 18%, you can literally, it's about $2,700 savings or $1,600 to $1,800 per $10,000 you make. So if you make $100,000 a year and you have 3 kids, that's saving you a considerable amount of money in just self-employment tax, not including federal and state. So if you're doing federal and state and self-employment that you're saving, it's a considerable amount of money. It's about $4,000 in savings. So in this case, I would save $12,000 in taxes because I'm in a 30% tax bracket. So by paying the kids roughly $14,000 times 30%, that's $4,200. So it's $4,000 savings, $4,000 savings, $4,000. I saved $12,000 by simply setting up a sole proprietorship in the middle and getting bank accounts for my kids and then paying my bills either out of the kids' bank account or out of the personal account by just adding this in the middle. $12,000, roughly $4,000 per kid in savings. Could be more depending on your tax bracket. Right? Now, what if you don't have a business that has extra cash? You're just making it, just scraping by. Here's what you can do. Actually, I'm going to just leave it on this page here. We have 12 days before the end of the year. Tell me, you guys listening here, and you guys are on, type in the notes how many kids you have under the age of 18 or how many kids you have that are in college under the age of 22. So I want to share with you a way that even if you don't have tens of thousands of dollars sitting around, how you can actually make this work before the end of the year. Because if you don't do this before the end of the year, you can't do it for this year. You can do it for next year, but not this year. So I got one person here, they got 1 kid. Okay. Tommy's got 0. You're going to like the next 2, Tommy, because it's going to help you. 2 kids. All right. So 2 kids would be roughly 28,000. 1 kid would be 14,000. You probably don't have that money sitting around in a bank account right now. So here's what you can do. If you don't have any money in your business account, but you have at least $1,000 over here in your personal account, you can loan this $1,000 to your business. The business then pays a sole proprietor. The sole proprietor then pays the kid. The kid puts the money back into the personal account. The personal account loans it back to the fortress, pays that account, pays the kid, goes back, pays the fortress, pays the sole proprietor, gives it to the kid. You do that 14 times roughly. That $1,000, you rotate it 14 times. And you can do this in one day. You log in. So when I log into US Bank, I have my personal accounts and I have all 5 business accounts in there. And I can transfer money from one account to the next. And it's an instant transfer because it's not going from bank to bank. It's just going from account to account. This doesn't have to be via check. So you could literally go in, log into your bank account, do a bank transfer from personal account if you need to. If you already have $1,000 into your S Corp, then you just do a transfer to the sole prop here. 15 seconds later, you transfer it to Chastney. 15 seconds later, you transfer it back to the personal account. 15 seconds later, you transfer it in a Fortress and go round and round until you hit $13,850. And then you go to the next kid. And then you go to the next kid. I met with a guy a few weeks ago. He had 14 kids. 14. 14 kids. Times 14,000 roughly. I don't even know what the math is on that, but I know it's at least $180,000, somewhere in there, that he can just move that around. So at the end of the year, you got to scramble. But once you get into next year, you can pay them monthly. You can pay them weekly, pay them daily, pay them all at once. It doesn't matter. It's your business. You pay them any way you want. Now, if you have kids under the age of 6, what you want to do is pay them as a model versus as a social media expert. The last time I did this training, the person on the call had 2 kids under the age of 4. Obviously, a 4-year-old's not going to be emptying the trash, washing the car, doing social media. So you got to pay them as models. And child actors, it's a successful career. The few of you that have kids, one of the things you can do to get more business is use your family on your business website. Use your family on your business cards. Use your family on the postcards. Use your family on the marketing. And the IRS knows this. Marketing experts know this. That's why they use kids in commercials. This is not rocket science. So the IRS knows this, and that's why you can hire your kids as models. Why would you go out and hire someone else's kids as models? One of my friends and mentor, Joel Bauer, one of the things he says all the time is, if you don't have kids, go rent some kids. Go find someone and rent their kids. Go get pictures taken with your kids and put them on your website, because you're going to get more business if you have a family. So if you don't know what to do with your kids and how to pay them or why to pay them, just hire them as models. I did it with my kids when they were little. Every year we'd have family photos done, but I didn't call it family photos. I called it business photos. Every year I'd hire a professional photographer. They come in, take pictures of me, my wife, my kids, take pictures of the kids by themselves. And then I would pay them out of the business account, because I was going to use those photos for my business, for my website, for my flyers, my brochures, my postcards, the Christmas letters that we'd mail out every year, the Christmas cards. And then we used to mail out birthday cards to our clients. And I would mail them a card with my kids on it and me. I also, because I paid for it was a tax deduction for the business, but it was a way for me to actually get professional photos done on my family. You cannot write off professional photos for your family to put in your house, but you can write off business photos to use in business. And then I could pay the kids as models to use those photos in advertisements. That's a really simple way to do this. And then you can pay them all at once. If you don't have the money to pay all at once, then you can pay them monthly. You can pay them a residual, a royalty. Set it up any way you want. It's your business. See, when it comes to taxes, it's all about vocabulary. If I called the photographer and I hired them to take a family photo, I can't write that off. But if I call the photographer to hire them to take photos of my family to be used in business, write off the whole thing. Here's the other thing. When you hire your kids as employees and then you go on a business trip, so for example, 3 years ago, I went to Costa Rica and I took all of my kids with me. 100% write-off. The airfare there, the hotel rooms, the food, all of the entertainment, all of the stuff that we did, because we actually worked every single day. I also took them to Dominican Republic, 100% write-off. I've taken them to Mexico, 100% write-off. I've taken them to Alaska, 100% write-off. I'm not on vacation. I'm doing a business trip and I'm taking my employees with me. If you're married, hire your spouse. It doesn't help you on taxes. It's not like you get a different tax deduction because you're filing joint. But when you do a business trip and they're an employee, their airfare, food, hotel, that's all tax deductible. So you just change your vocabulary. It's not a vacation anymore. It is a business trip. And as long as you spend over 50% of the time working on your business, it's 100% tax deductible. If you go on a 4-day business trip and you only work 3 of the days and you actually spend 1 day doing fun stuff without talking about business, talking about social media, talking about advertising, you really are just having fun. I don't know any business people like that, but just in case you're that person that can turn off, then you can't write off that 1 day unless it's on the weekend. So if you have a business trip and it's Thursday through Monday, you only have to work Thursday. Yeah, technically you only have to work Friday because Thursday would be a travel day and Monday would be a travel day. So if you schedule your trips Thursday through Monday, you only have to work half a day on Friday. That's it. And then you get the write off all 4 days because you get 2 days for travel and you get Saturday and Sunday off. So stop taking vacations and start taking business trips with your employees, which just happen to be your spouse and your kids. So that's how you can start writing off your kids. Okay?